Hello, I'm Tony Eden and I head up the commercial banking team here at Arbuthnot Latham. So what does that mean? I look after the real estate team where we support clients on large portfolios of buy-to-let properties, HMOs, build to rent, so the private rental sector really. And then we've also got a SME general clearing team, so we support clients with their day-to-day banking needs as well. On top of that, professionals, where we provide them with both clearing and also liquidity solutions to lawyers, insolvency practitioners, and also architects, amongst others. And then finally, we've got a construction team, where again, we provide clearing facilities and those liquidity solutions for tier 1, tier 2 and regional construction businesses. Today we're going to talk about propositions, and I'm joined by Scott Curley, who's our Business Development Director for the South East from our asset-based lending team. Welcome, Scott.
Thanks, Tony.
So asset-based lending, can you just bring that to life for us? What does it mean?
Of course. So our asset-based lending team, we're an entrepreneurial lender. We provide funding solutions starting at 1 million, going up to 35 million pounds. That supports SMEs and investors with multiple things, for example, MBOs, MBIs, acquisitions and growth capital. The asset-based lending team have deployed over 500 million of facilities across 140 clients since inception. We've supported a number of leading private equity and corporate finance advisors to provide speed and certainty on every occasion. We've done that through short reporting lines and access to key decision makers.
Interesting. And in terms of bringing that to life in a transaction, so for instance, we've done a government growth scheme for a client in the northwest of England. We've also supported a client with a large buy-to-let portfolio in the southeast around London. But that one in the northwest, using that government scheme, was really interesting because it was a client who was renting their trading premises for the last 10, 12 years, negotiations with landlords, etc. And actually they turned around and said, I might buy this. So they approached us, existing client, and said, can you support us? We obviously do the due diligence, etc. But we use the government growth scheme to help facilitate that. And now the client isn't negotiating with landlords anymore. It's on their books, it's an asset within the company, and they're paying towards reducing that debt and increasing that total net worth of the business. But is there an example that you can bring to life that you've done recently?
Definitely. It's probably worth me talking through first how our facility product suite works.
Yeah, please.
So invoice finance is the cornerstone of asset-based lending. So we start with invoice finance, and then we've got the ability to bolt on inventory facilities, plant and machinery facilities, and property facilities, as well as cash flow facilities, including the growth guarantee scheme facilities. The growth guarantee scheme is a fantastic tool for liquidity, for providing extra headroom for a business. Generally, businesses will use the asset-based lending element to fund day-to-day working capital, and the growth guarantee scheme is a liquidity tool to help them on their growth trajectory. I've worked with a business recently that is a fire suppression solutions business based in the Eastern Counties. They was a fast-growing business that approached us to see if we could provide some growth capital. We looked at an invoice finance facility with a fully revolving growth guarantee scheme facility bolted onto that. Mm-hmm. I should note at this point actually that in terms of the growth guarantee scheme, we can provide fully revolving facilities. We can also provide amortizing term loans over 6 years, which is a market leading proposition. That the facilities in terms of growth guarantee can go up to £2 million. In this instance, business owner had that pool of liquidity to commit to the growth trajectory. That's been very successful. They're continuing to grow their revenues and their EBITDA off the back of that. I think it's the real key point here is the flexibility that this gives business owners. Entrepreneurs by nature want to seize an opportunity, and actually having that headroom, having that ability to do that is really important.
So in banking and a lot of industries, we we love our TLAs,
Yes.
our three-letter acronyms. Now,
Yeah.
just maybe jargon bust a little bit about MBOs, MBIs, if you can.
Yeah, of course. So management buyout is where a management team, existing management team, are brought out of a business. Often that's done either through private equity or through a trade purchase. If we're looking private equity, often they'll go on what they describe as a buy and build strategy. That's where they are buying multiple businesses to consolidate them into a group. Often they'll be in the same sector or have complementary revenue streams, etc. Management buy-ins will be where a management team actually buys into a business. Not all lenders have got appetite for that. There are some obviously additional risks that are associated with that. At Arbuthnot Latham, we are happy to consider those opportunities.
And then one thing we pride ourselves on here is that relationship-led banking approach. What does that mean? You can speak to your banker, your relationship manager, you can speak to their executive, their assistant as well from that side. But also, I think we can provide that holistic view in private banking. We've got wealth management as well. So you've got your commercial banking solution, you've got your private banking solution, and you've got your wealth management solution as well. How does that fit in with the asset-based lending?
Yeah, it was really, really important to us. So we work with a number of different areas of the bank. So given the nature of the growing nature of our portfolio clients, they're often subject to offers from both private equity and trade purchase discussions. Now, obviously the entrepreneurs, the business owners, therefore are going to need some wealth management advice, and we're able to make an introduction to the experienced wealth management team here to sort of help them through that process. Obviously, we're funding SMEs. SMEs are often underserved by their existing transactional bankers. So make referrals into your team. As you rightly said, you've got sector specialisms, which is fairly uncommon in today's world, and allow you and your team to talk to them through everything from a transactional banking perspective. But similarly to your teams, our relationship managing asset-based lending have got 10 clients or less. That's quite unusual in our sector. Often lenders will have portfolios of 60 or 70 clients, which means that their relationship managers are fairly reactive. Given the small portfolios our relationship managers have got, they're incredibly proactive to help them with those positive discussions around growth, around transactions, etc.
Moving on to the macroeconomic environment, shall we say? I think really since COVID, there's been instability, and I think there comes a point where we say instability is stability now, and it becomes a new norm. In our space around real estate, there's been changes to planning and gateway twos, and the rhetoric seems to be that it's delaying in terms of building, and it's more problematic. Also, we've obviously had America with import tariffs, and I know the government announced another $500 million for the GGS to support those businesses that may be impacted. But in your space, in that M&A, MBI space, or in that ABL space, what are you seeing as the main factors having an impact, or also from a positive side?
I agree. I mean, you're right. I think volatility is the new normal. Business owners are faced with an ever-changing landscape on almost a daily basis. An example of that would be, government policy changes. You rightly say tax increases, etc. We saw national insurance increases last year, which had a big impact on operating costs, etc. of a business. So the asset-based lending is a really good tool for that. There's multiple ways in which you can cut our facility suite, multiple liquidity options for a business. Actually having that headroom is incredibly important to navigating through those challenges. Having the right capital structure is important for a business, because there are good times and there are bad times. UK SMEs are incredibly resilient. It's just about them, as I say, having the right capital and structure, having the right structure in place to help them through that.
I think I agree with you. UK SMEs are incredibly resilient. The they employ about 80% of our workforce in the UK, and they are the engine room of this economy. And I think the GGS goes some way to supporting and helping them. We obviously try as a bank to support them as much as we possibly can as well. But I think going forward and looking into the future, we need to continue to support them. Otherwise, the economy might not be as strong without them as it is with them. Then sectors, you mentioned that though. Is there any sectors that are hot at the moment that you would say that you're seeing a lot of activity in?
Yeah, it's really interesting. So one of the sectors that we see a lot of opportunity in is precision engineering. Obviously, since COVID, you've seen a lot of sort of nearshoring or reshoring of precision engineering type activity. Seems to be a lot of acquisition, a lot of private equity investment that's going into the sector. Noting, for example, offshore, if there's a pipework structure that's a long way under the sea, then actually businesses are willing to pay a little bit more for UK-made products because rather than Chinese, which there may be issues with. Actually, the cost of paying a small margin more for an engineered product in the UK is much less than having to spend a lot of money on fixing a problem that's created by a faulty part, etc. So that sort of stuff, that's all good news for the UK. And I think something we need to leverage on more and more moving forward is our capabilities in those sort of sectors.
You mentioned private equity. So would you say there's a lot of liquidity looking to be distributed at the moment, or are people sat on their hands waiting to see what happens?
Well, I think a bit of both. I think there's a lot of dry powder out there in the private equity market. They have been faced with the same macroeconomic challenges as SME business owners. But actually, the private equity teams that I am speaking to are all looking for opportunities, and as a key part of their asset-based lending business is supporting those acquisitions. With the different liquidity tools that we've got, it can support the day one consideration with their equity going in, but it's also the ongoing working capital of that business and the growth capital from there onwards.
Yeah. And then when I speak to SMEs, and some of their biggest challenges, they say, is actually legislation, and that's one of their biggest concerns as well. And obviously, surrounding yourself with people that understand that is really key. Is there anything from a legislation side that your clients, or what's their main concerns when you go out and speak to them?
It's a really good question. I think legislation is an important one. Obviously, people is incredibly important as well. Having the right people in your business. Staffing with the inflationary pressures created by the Ukraine war. That was a massive cost pressure for people. Had the national insurance price increases, but at the same time, you have to have important people in your business. Your staff are the lifeblood of your business, as SMEs are the lifeblood of the UK economy. So I would say staffing is still a really big consideration, as well as the macroeconomic environment around tariffs and that sort of stuff.
I get asked quite a lot about what advice, guidance would you give to someone looking for a bank or funding or support from that side. And my go-to has always been surround yourself with expertise, and that expertise, those people become trusted advisors, and your bank manager or your funder should be part of that, working alongside your accountant, your lawyer, other advisors that you may have in the business, which then allows you to grow that business to whatever you want to do thereafter. Is it a sale? And then you can then obviously speak to us about the private banking, the wealth planning. But what advice or guidance would you give to someone who's saying, I'm looking for a bank or a partner or a funding partner?
I agree with everything you said. I think you need to look for an advisor or a lender that can act with speed and certainty. Access to the key decision makers within their business are incredibly important. So in the asset-based lending team here, the managing director, Tim Hawkins, the head of ops and risk, James Shaw, and our head of credit, Phil Squire, are all actively involved with both our existing clients and our new clients. What that means is that if you're going through a process, they're already aware of all of the details, and they are the people that are finally signing off the deal at the back end. So they're able to help those businesses through that process. My background before joining Arbuthnot Latham was high street banks, and they've got a very different model to that. So what we're set up to, as I say, to navigate the landscape of an ever-changing environment and allow businesses to seize opportunities when they come up. If you are an entrepreneur or you know someone that'd be interested in a conversation, I'd be really keen to have a chat with them about that, just to talk the ways in which we can support them moving forward. We've got lots of good tools available for them. We've got a growth guarantee scheme hub. We've got a dedicated website with some testimonials from some of our existing clients, some of which we've talked about today, that they can visit, and then that will allow them to learn more about Arbuthnot Latham and the ways in which we can support them moving.
Thanks for sharing that with us.
Thanks.
Appreciate it.
Thank you.